Kyle, so good to see you. We start with a really important question. Are you taking on too much risk? We have 4 signs that you might be. So risk isn't just about numbers. It's about how you feel when market conditions change. So let's talk through 4 signs that you may be taking on more risk than you should. Sign number 1, you check your accounts constantly, but how often is too often?
Hey, Aaron. Yeah, thank you. I love topics like this because so much of it comes down to the fact that people lose sight of their primary jobs as investors. I always
Yeah,
go back to this. What's your main job as an investor? And it's really to balance 2 big risks. One is the short-term volatility that
right.
everybody faces, and the other one is long-term inflation and losing the ability, to protect your purchasing power over time. So if you're checking your accounts on a daily basis, it probably means that your portfolio is a little bit out of line with where you'd like it to be, and you're probably struggling to balance some of that short-term volatility.
Yeah, really good point. All right, next sign. Ask yourself, do you lose sleep when the market drops? Although, Kyle, it is really difficult to tune out the noise sometimes.
It really is. And I mean, look at 2024. I mean, honestly, the last 5, 6 years, we've dealt with so many wild headlines. They've been nearly impossible to ignore. So I think that for one big reason that the headlines can really cause some stress and damages, it really affects one particular type of person. And that person is somebody who may have said, hey, I'm retiring and I'm just going to leave all my money in my 401k from my old job. And that's my retirement plan, right? So if the headlines cause me to go back to work, that's why I'm worried about them. That's not a good retirement plan. There's way easier ways to live your life than that plan that I just talked about.
Well, that's not a plan.
Right.
That's hoping, right? Hoping your 401k can survive that volatility. All right. Sign number 3, that you may be taking on too much risk. You've made panic-driven decisions before, and we've talked about this in prior videos, Kyle, about the emotional cycle of investing.
For sure. And that's kind of that roller coaster of emotions that we talk about right there on the screen. And usually this is kind of a collective feeling that people may share. And if you're in maybe the break room talking to some of your coworkers and talking about how much you guys have made this year in your 401ks, you're probably near that thrill or euphoria, right? That
Yeah.
point of maximum financial risk. Whereas you look back at times like, that back half of 2022 where everything was down, for so long, people are starting to panic and kind of just feel despondent. And so if you don't have a plan and you're basically making decisions based on what your emotions are telling you to do at the time, a lot of times you can really get burned. There's a lot of studies out there. BlackRock does a lot of good ones on these as well, where you can really burn yourself by thinking emotionally instead of analytically.
Hmm. Right. Which goes back to not having a plan. Good point. All right. Last sign, you feel pressure to chase returns, AKA FOMO.
FOMO, this is a big one. It was so crazy in 2021, the things that people were feeling like they were missing out on. And you go back and look at some of them, it's almost like the dot-com bubble burst. Some of those were such big misses, but the feeling of missing out, maybe you're not getting the kind of returns that you feel like you should be. Or this goes back to my initial statement. Remember those 2 big forces that we're balancing as investors. If you feel like you're losing out a little bit to inflation, or maybe your returns are not keeping up, maybe you're not doing a good enough job of staying invested over the long term in consistent strategies that align with your plan as a
Hmm.
whole. And that's the biggest cause, in my experience, at least, of FOMO that people have.
Yeah. It's so hard to take all the stress and doubt out of this. So, how can working with a financial advisor help us either stick to or create a plan and stay in line with our risk tolerance?
I think it's so valuable to work with somebody that you trust that can guide you on
Yeah.
this stuff. And really, if they're a good pro, they're going to sit down with you like we do with our clients and say, all right, let's break down 2 really important things. One, what can your retirement plan sustain? How much risk can your plan take realistically? And secondly, let's talk a little bit about how you feel about investing. Maybe let's talk about some of those experiences that you may have had in the past where, hey, maybe you sold out of some positions and it wasn't the right time, or you chased something you felt like you were missing out on. Finding that balance between what your plan can sustain and what you can sustain emotionally, usually that's what's going to create that perfect risk tolerance, or that the appropriate risk tolerance for the client.
Right, right. It's again, having that plan that's in line with your tolerance helps you just stick to the plan, which as humans can sometimes be the most
Yeah.
challenging part. So, Kyle, if
Right.
somebody would like to sit down with you and create that financial plan, what's the best way to reach you?
Best ways through our website. That's firstcoastfinancialgroup.com.
Great. Kyle, thank you.
Thank you, Aaron.